All right, Matt the Mortgage Guy here, recording a quick video to talk about money movement during a home loan. As with most of my videos, we come across different things and we realize that, hey, we got to do a better job of educating people, educating clients so they know what to expect, what to do, what not to do, what can cause delays, what can make a loan go super smooth. So in this video, I'm going to touch on the money movement during a loan, what you should do, what you shouldn't do, how you can avoid some of the pain some folks might feel because they rush into the pre-approval process or they rush into the home loan process and they're in contract and now it's a race against the clock. They've got a close of escrow that's closing in 25 days and every day that ticks by, they're waiting for this money to come from here, then that money's gonna go to there. They gotta document this and get 2 months of that statement and the show the transfer and this and that. And it can be a little bit messy. So here's where I'll start. The absolute basics when it comes to home loans is whatever monies you're using for a down payment, the lender's gonna want 2 months bank statements, wherever that money's coming from. So if you've got a super clean and easy deal, which some people do, you've got $37,562 sitting in one checking account. Your down payment plus your closing costs are $24,624. You show 2 months of that bank statement. When it comes time to close, you wire money from that statement. The wire shows it came from that account. It's just that easy. Lender goes, okay, we verified money in that account. The money came wired from that account. Good to go. What's more common is things are a little bit more complicated than that. And you might have your money in 2 different banks, or you might have money in this bank and you're pulling from a stock account, or money from this bank, pulling from a stock account, also getting gift funds, or money in this bank, pulling from a stock account, also getting gift funds, also taking a 401k loan. Ideally, some of this stuff and some of this game plan gets vetted and gets talked about up front. What's the game plan? Oh, I've got $36,000 in my 401k. I know I can take it. It's called a hardship withdrawal, even though it's not a hardship, but it's basically you won't be taxed if you take it to buy your first house. And most people can take a loan and then pay themselves back with interest. So they don't feel like they're getting themselves behind because they're paying themselves back with future paychecks on this 401k loan. So it's a pretty common thing to do. Well, when you're submitting offers and speed is important and your realtor wants to write 21, 22, 25-day close, and you haven't even initiated that 401k withdrawal or even thought about what the process is, how it works, what you need to do, that can cause delays, stress, things we're trying to avoid. And so in that case, a lot of times the 401k, it needs a contract, it needs an address, it needs some loan information. So you might not even be able to start that before you get into contract, but it's a good idea to at least know what the process is. So then you could say, yep, I'm in contract, I need X, Y, and Z, submit on day one, that 401k withdrawal is in process. Because like I said, you're gonna need 2 months of statements showing where monies came from, and if monies are being transferred in, then it's 2 months of statements from the 401k, which probably is quarterly. So it's just a quarterly statement because they come out quarterly. And then showing those funds being transferred to your checking account. And then in your checking account, you wire into title. And so I think that's the main thing. And it's really similar no matter where it comes from. It comes from a stock account, it comes from a 401k account, wherever it comes from, we just need to document it. And so I think if I were to give advice is know what you're gonna do and have a plan. You might not start moving the money. I talked to plenty of people who are 6 months out and they say, well, I wanna liquidate some stocks and should I do that now or should I do it then? There's no problem with doing it when you're in escrow because you don't wanna pull monies and then just sit there and end up not buying, or it becomes months and then you've missed out on market run up or you've missed out on something. So I totally understand waiting until you're in contract, but know exactly what you're gonna do, where it's gonna come from, what documents you need to provide, and be prepared to basically press play on the game plan as soon as you start. It's not just like, I get money in X, Y, and Z. We'll figure it out once we get in contract. Unfortunately, that's 90% of how it goes down. Trying to avoid that, trying to educate the public so we can do better and be better, close faster, close with less stress. That's my goal. Have any questions and you're in California, feel free to reach out. Matt, M-A-T-T, at mattthemortgageguy.com. If you're in another state, I'm happy to refer you to a high quality broker who will take very good care of you. They better, or I'm gonna bust them up. All right, thanks for watching. Hope you have a good day. Bye-bye.